This is Zach here with the US Chartbreakers here at Zach's Traders Cafe for Friday, the 27th of October. Not a great month for the S&P so far. We're basically losing that 4,400 area gap down that we had last month and failed to fill that gap, which tends to be a negative signal. Broken below the floor of that falling July trend channel there at 41.85, below 41.85. There is the prospect of hitting the floor of that rising trend channel from last summer 2020. Around 40.20, so in a way not far to go in terms of the downside. RSI near the oversold area, but obviously could go a bit lower with a potential move below 41.85. Above 41.85, then we've got the chance of recovery to the 42.20 area, which was the initial October support zone. On to the stocks, and starting off with a decent turnaround situation. Arcbest, what I call a handbrake turn. So the shares flying in the opposite direction earlier this week, but gapped up quite violently. And in fact, it's actually a bear trap island reversal with the gap down that we had earlier in the week and then the gap higher today. That tends to be one of the strongest signals around, or charting setups, given that it means that share traders have been caught on the hop. The old support there back in September around $97, above 97. We're looking at the top of the recent range, $110 plus, hopefully to be hit by the end of next month and ideally a bit sooner than that. Another stock of interest for the bulls at the moment is coming up, Appfolio, and here we've had unfilled gap to the upside through the resistance, or at the resistance now, around $198. Top of that rising trend channel from the end of May, currently pointing at a target towards $220, and we're hoping for that by the end of next month, especially if we can stay above the recent resistance around $188. So see how the shares settle for the end of the week. Moving along to BM Technologies, and here you can see that we've got this potential triangle formation. The key here is staying above that 50-day moving average at $2.14. Above that, we're looking for the top of the triangle and the old August resistance area at $3.25. And maybe we'll get that by the end of next month or even sooner. Moving along to a stock which is new to the Chartbreakers, Comfort Systems, and nice start here with the massive gap to the upside, bear trap reversal from below the old October support around $163. End of day close above the 50-day line at $173 could take the shares up towards the top of the rising trend channel that's been drawn on the daily chart, and that is heading towards the $197 area. That channel in place since March, and hopefully 197 could be hit by the end of November, especially if we continue at this pace. You can see there was a gap down back in September, so this is a bear trap island reversal, and therefore we are strongly backing the idea of a turnaround or a sustained turnaround even after the big gap higher that we've had today. The next situation is Capital One, and here another bear trap island reversal, gap down back the earlier this month, and have gapped up through the 50-day moving average after the bear trap from below the initial October resistance at $91. The view now is at above the floor of the old gap there, $95. We're looking for a target as high as 105 at the top of that broadening triangle from August, and looking for that to be hit by the end of next month or even sooner, but it'd be nice if the shares stay above that $95 level. The next situation is Dexcom, and we can see that here we've had quite a sharp turnaround, bit of a handbrake turn there with the last 2 days very strong, very weak rather, and strong push higher today. The only block on progress at the moment seems to be the 50-day moving average at $93. We want to see that break and then give us a potential move to the top of that rising trend channel base at $102 by the end of next month. What we don't want to see really is sustained price action back below the floor of the gap, the overnight gap at $84. Moving along to Dec, and it's actually called Deckers Outdoor. Here we've had an unfilled gap to the upside through the old September resistance around $545, above 545. We can see that the shares could head up as high as $600 at the top of that broadening triangle from back in July. And the key here really is holding above that broken resistance, which hopefully the shares will do after that very nasty bear trap that we had earlier this week. Next stock is one that should be of interest to the bulls, given the way that we've had such a massive decline for Graf acquisition. The view now is that we've got neckline resistance now becoming support around $3.80, and above that we've got the chance of filling the gap up towards $5.70 from back at the beginning of the month, and then obviously after that looking for the $7 area and second gap down that we had there. But the key here is holding $3.80, so that will be the crunch point for the stock over the next few sessions. Onto a stock which is looking very encouraging indeed at the moment, Immunitybio, and beautiful turnaround here. We've broken the resistance on the way down around $2.20 and above $2.20. Quite ambitious about the credentials of this situation. The top of that broadening triangle from back in June, heading towards $4, and we're looking for that by, well, as soon as the end of next month. Stock which doesn't get much airtime is called Integrity Media Technology, but a nice bear trap island reversal there. So we gapped down earlier in the month and gapped up today. And all we're really looking for now is a break of the 50-day moving average, $2.20, on an end of day or end of week close basis, and we could be heading up to $4 as soon as the end of next month. So certainly one to have a close eye on, keep a close eye on in the near future. One of the bigger names on the market is obviously Intel, and here it's a bear trap gap reversal from below the $33 area, which was the September support. Above $33 now, we're looking for $38 by the end of next month, and hopefully a bit more given the sharp reversal that the shares have served up today, catching the bears on the hop. The stock which might be popular with some is Nerdwallet. The reason for that is that we've got this broadening triangle from the end of August. We've had a sharp turnaround with a gap back above the resistance on the way down around $7.55. Above that, we're looking for as much as $10.50 by the end of next month. And obviously, it would help if we get a nice end of day close through the 50-day line, the blue line there, at $8.45 by over the next few sessions, ideally today. Finishing off with a stock which hasn't covered itself in glory over the recent past, unless you're a bear. We broke that key uptrend line there from last year at $2.40. Below that, there was the risk of retesting the $212 area, the old support there from back in August. But below $212 now on an end-of-day close basis, there's the risk of a further drop for Tesla shares down to $190 at the floor of that falling trend channel from back in June. It'll be interesting to see whether we can at least have a retest of the recent resistance around $2.20 before any further losses for the stock. That's it for me today. More updates next week.